In 2020 alone, the top 25 hedge fund managers made $32 billion, which is just absolutely insane. I've always felt that the hedge fund industry was kind of shrouded in mystery, and today I'm going to try to uncover the veil. What's up everyone, welcome to Rareliquid. Shout out to our sponsor of today's video, Financial Edge, and today we're going to talk about how to break into a hedge fund and how much hedge fund investors make. With that said, today's agenda looks like this. I'll first discuss how to enter into the industry. I'll then provide details on how hedge funds are structured. And lastly, I'll end with how much hedge fund investors make. Let's first discuss how to break into a hedge fund in the first place. Really simply, there are two main ways to break into a hedge fund. The first is by studying in a technical field like math or computer science, which makes you eligible to work at a quantitative trading firm that mainly uses algorithms and high frequency trading to beat the market. The second path is by working at a top investment bank for around 2 to 3 years, which is the talent pool a lot of more fundamental hedge funds recruit from. For that first path, normally what happens is you just apply as an undergraduate or a graduate student, and maybe also you might be a software engineer that decides to apply to work at a hedge fund. And for that second path, usually what happens is headhunters reach out to you when you work at an investment bank, and that used to happen to me all the time at JP Morgan. Unlike quant trading firms, fundamental hedge funds focus more on the growth prospects of a business, and so a lot of times what this means is understanding where a company lies in the competitive landscape. There's a lot of discussions that are had with management teams. There's a lot of focus on building financial models, and that's why there's a lot of investment bankers who work at hedge funds. On that note, actually, if you're planning to recruit for banking in order to eventually join a hedge fund, I highly recommend checking out the investment banker course at Financial Edge. The founder, Alistar, is literally the instructor who taught me and hundreds of other analysts during my summer training at JP Morgan, and he's this British guy who has a really great, good-natured personality and cares a lot about being a good teacher. Financial Edge is a sponsor for this video, but I recommend this course to anyone who's interested in recruiting for banking because I think it's the best product out there. Their instructors train the analysts at the top 4 banks who pay tens of thousands of dollars, if not more, and you could get the same lessons for just a few $100s and learn at your own pace, so I think it's really worth it. You can also find other courses that focus on topics like accounting, asset management, and a lot more. If you're interested in a course in financial ed, make sure to use my link down in the description below and use the code Rareliquid25 because then you'll get 25% off. I also wanted to note that a lot of people go into private equity and then go into a hedge fund, but most people who go into private equity first go into investment banking, so that's why I didn't really name it as a third viable path. Okay, so now that you know how to break into a fund, let's next discuss how hedge funds make money. Hedge funds implement a wide variety of different strategies and also come in a variety of different compensation structures, and so today we're going to talk about the most common one, which is known as 2 and 20. In this compensation structure, a fund would charge 2% of the total assets under management, or AUM, to cover annual operating costs, and then receive a 20% performance bonus on the returns it makes for its clients above the 2% base fee. So for example, if a fund managed $100 million, that would be their AUM, and that fund would receive 2% of that, so $2 million in fees each year to cover things like employee salaries, expensive research resources, rent, and more. Then if the fund achieved a 10% annual return, then the performance bonus would be 20% times the difference between the return minus the management fees. So in this case, that would be 20% times 10% minus 2%, or 8%, which gets us to 1.6% of assets under management, which would mean $1.6 million. This $1.6 million becomes a performance bonus that gets spread amongst all the employees, and hedge funds usually don't employ that many people. So this essentially is why hedge fund investors can make so much money. We can also see here that as the fund's annual performance increases, their performance fee drastically increases as well. In addition, if the assets under management goes up to, let's say, $140 billion, which is how much hedge fund Bridgewater manages, you can see that the performance fee swells up to $2 to $8 billion a year. Bridgewater reportedly has around 1,500 employees, so this isn't how much the average employee makes because the lion's share goes to the top level management, but this would mean, depending on performance, the average compensation would be around $1.5 million to $5 million per year per employee. Of course, all of this sounds super lucrative, but being in a hedge fund and beating the market consistently when you have so many other funds that you're competing with is super hard. And if you have negative returns or just 0%, then that means that performance bonus also goes to 0. In addition to this, clients of a hedge fund, which basically are the hedge fund's investors, have the right to pull out their money. And there are some rules and regulations about how quickly you can pull out your money, but basically, if a hedge fund is not performing and investors decide to pull their money, then hedge funds are required to liquidate their positions if they don't have the cash on hand to return to investors. And so that basically can totally blow up positions. It could affect the entire hedge fund's performance. And ultimately, with less assets under management, that can also just mean less compensation for everyone involved. So there's a ton of pressure to perform if you're working at a hedge fund. If you're liking this content so far, I'd really appreciate if you could help support the channel by smashing that like button. And also, I wanted to let you guys know that I give pretty much daily updates on stocks and crypto news on my Instagram, so feel free to check that out if you're interested. All right, next up, let's talk about how much hedge fund investors actually make. I did have a lot of friends who used to work in banking and now work at hedge funds, so I did speak with some of them to get the information that I'm about to show you guys today. But with that said, it's not like my investment banking video where I can give you kind of more detailed year by year type of salaries and bonuses. And so just wanted to caveat everything by saying that in hedge funds, salaries, bonuses are a huge range, and I think you'll see that pretty soon. The first level at a fund is an associate or analyst position where you're making a salary of around $100,000 to $300,000 and a bonus ranging from $0 to $1 million for a period of 2 to 5 years. To give you a more narrow range, I would expect that after 2 years of banking and in your first year at a hedge fund, so basically 3 years out of your undergraduate, you could probably expect to make a salary of around $100,000 to $200,000 and then receive a bonus of around $100,000 to $200,000 if the fund performs well. So all in all, a range of around $200,000 to $400,000. This is a super rough estimate, but afterwards, I would then assume a roughly $50,000 to $150,000 increase each year for the next 2 to 5 years, depending on your seniority, how you're doing, and how the fund is doing overall. Then after the analyst position, you become a portfolio manager, which can definitely take longer than 5 years to be promoted to, depending on the firm. From here, unfortunately, I can't really give you anything besides estimates on how much you would make because it's incredibly variable based on the fund and performance. But this article states that for a hedge fund portfolio manager managing around $50 to $250 million, you could earn around $600,000 to $3.8 million a year. Then for a senior portfolio manager managing around $500 million to $1 billion, a 10% annual performance could yield you around $6 million to $12 million per year. And for the owner of a hedge fund that manages $1 billion with a 10% return, he or she will make $15 million to $25 million a year. And for a $10 billion fund, 10 times that, so $150 million to $250 million a year. For reference, here is a chart for the top earners in 2019 of hedge fund managers who each earned more than $1 billion each. So basically, if you're able to break into a hedge fund, you can expect to make at least a minimum of $200,000, but probably closer to $300,000 to $400,000 a year. And as time goes on, you could probably easily break that $1 million a year if you're able to stay in the industry. Let me know what you thought about the video, and if you have any questions or comments about the industry, I'd be happy to answer as much as I can down in the comments below. As a friendly reminder, be sure to check out Financial Edge down in the description below if you're trying to break into the industry, whether it's investment banking or a hedge fund. And I also wanted to let you guys know that I have a free daily newsletter that provides stock, crypto, and macroeconomic news, so feel free to check that out down in the description below. While you're down there, I also have some links where you can earn free stocks and Bitcoin if you use my links in the description. And lastly, I also have a Patreon if you yourself are interested in investing and want to see what I'm trading, get some buy-sell alerts, see my portfolio for options, stocks, and crypto. Lastly, if you found this video interesting, you might also find my investment banking video that I mentioned earlier, so feel free to check that one out next if you're interested. And with that said, thanks so much as always for watching. Hope to catch you in the next video. Thanks and peace out.